Hello and welcome to BitThink with me, Christina. Today I want to talk about volatility, uncertainty, risk, and certainty. And before I get into it, if you have watched my videos before, you will know that I think that most of the things that inform any of the ways in which we think rationally are actually based on ideas that are imaginary and take their force and reality from a collective belief. And so, one of the things that I want to discuss today is the way in which we need to think about our own personal choices and inclinations towards the belief systems we want to believe in, and the need to remember that there are additional and alternative belief structures out there, both competing with and complementing the ones that we feel most strongly about. And that in order to prevent a kind of cult-like disappearance into your own preferences with regards to what you want to believe, you need to keep in mind and pay attention to other ways of thinking about what might turn out to be true when we consider the aggregate of all kinds of different groups of people and their collective belief structures. Another way of saying what I'm trying to express is that, for example, one can have embraced what one feels to be really profound truths that are expressed within Bitcoin and the crypto sphere, and have invested both time, money, and emotion into those systems, but that one should not be precluded from thinking about the other kinds of belief systems that inform, for example, other traditional markets, or the belief forms that come to the very language of volatility and risk as they are applied to what is an infant market. I think that that's one of the driving points for me in making this video, is to try and make sure that there are ways that people who are coming to this space from a traditional space, who want to remain to whatever extent in a traditional space, but still engage with the cryptosphere, or those who are fully involved in a cryptosphere, their ability to continue to take a benefit from even remembering to imagine how the rest of the markets imagine. I think some degree of crossover and self-awareness can only be helpful. So I'm going to talk for a little while first now about volatility. And I do not think that volatility is risk, and I do not think that volatility is uncertainty. What I think volatility is a reflection of a present time aggregate expression of the market participants' various emotions and choices. People in a marketplace, whether it's an ancient marketplace or an early industrial marketplace or our current crypto marketplace, is the people in that market are an extremely wide range of individuals who are all making decisions based on individual premises, beliefs, desires, emotions, parameters. And I think it's important to remember that one of the things that we are seeing reintroduced into people's consciousness through the crypto space is the concept of volatility as a sign of life, as opposed to a signal that should be feared. It is certainly true that one of the most widely held consensus beliefs at the moment, and for some time now, about the stock market and about the bond market and generally about the traditional markets, is that there is very telling, if not worrisome, lack of volatility in the prices of whether it's bonds or stocks. And one of the things that I think crypto is reintroducing us to is the idea that volatility is a normal part of ongoing price discovery, and that we have had such a financially repressed and manipulated market for at least 10 years, that the conditioning we have towards prices only ever going incrementally up, and the idea that a 2% change in the stock market's price represents a crash, is the flip side of the anxiety that is felt with regards to the volatility in Bitcoin's price or any of the other altcoin prices. So if volatility of price represents the present, and it represents the aggregate of a wide range of competing emotions and decision-making processes, the futures market represents an attempt to introduce some degree of certainty. And that is one of the reasons why I believe we have seen a slight shift in the way that Bitcoin itself is being traded. I also think that's why we're seeing a shift in a kind of mentality around Bitcoin, which is giving way to a desire for a greater degree of predictable certainty. The extent to which this is viable or possible, or the extent to which this is simply a reflection of a conditioned need to have less requirement to navigate uncertainty and risk, we shall see. Certainly, the futures market and its pricing is a very valuable and legitimate tool for miners, the producers, to be able to predict cash flow, considering that they are the ones that have the substantial cash outlay in the first place with regards to electricity. But I think it's also a reflection of a mentality which really is deriving from traditional markets and traditional markets as they've been experienced in the last 10 years, which seems to suggest that an asset can't really be an asset unless its price is fixed in micro increments only going upward. I will also just take a moment here to say that it's my personal opinion that with regards to the, quote, institutional money that many in the space talk about, or the, quote, big money that's referred to, I personally think that you're really only going to see that when you do get ETF structures trading. They are familiar enough instruments that individual entities and aggregates of individually wealthy entities will really start to flow into the space. I think in the context of futures, you've got a more narrow range of market participants, and you see an effort being made to, as I said, introduce a degree of certainty that, from the point of the miners, is legitimate in the same way that certainty on the part of the corn farmers would be legitimate in a corn market, corn futures market. So my point here really is that volatility needs to be seen as a sign of life and an aggregate expression of emotion, and that the other piece of any kind of market that one always needs to pay attention to is volume. If you're selling sheep on a given day and there are 50 people in your market with a range of emotional needs and drivers, it's going to be a different experience than if there are 5. And I will give a shout out here to HuFin News, who I think are doing contemporarily the very best job of reading the market charts available with regards to what is happening and what is likely to happen in the short term. Because I think that the way that they read the price bars is absolutely as an aggregate emotional expression, and they pay specific attention to volume. So I've already pointed out that volatility does not equal uncertainty. I also really want to make the strong point that volatility does not equal risk. Risk is a distinct thing, and I think it is worth differentiating very clearly for anybody getting into the cryptosphere or anybody already in the cryptosphere. What is meant by risk and what is expressed by volatility? So if volatility tells you what is, risk is really trying to talk about what may be. And it's important here to think about our use of probabilities, the likelihood, the size, and how it relates to our sense of loss. Because risk is all about trying to assess in the present how we will feel in the future about losing something that we currently have. It's also worth reflecting on the fact that we may well be gauging how we feel about losing something that we could have had. So I quite like this definition up here, although I do want to say something about measurable, reminding ourselves we're talking about probabilities. And I think here it's worth kind of reflecting on the fact that regardless of what kind of belief system most appeals to you or you intuit has the greatest chance of success, it is important to recognize that one of the risks about being in cryptocurrency is that some of the other risks, whether they have to do with government debt defaults, the collapse in the value of the dollar, the crashing in the sense of significant decline for a significant period of time in the stock market, or God help us, a real collapse in the various bond markets, no matter what kind of assessment we have about those risks, it's important to remember one of the risks that we run is with regards to timing. So I find myself doing more advising than I expected to, and I seem to have sort of morphed into somewhat of a consultant counselor. And one of the things that I say to people who are coming from a traditional portfolio of whatever size is to point out that they need to follow the advice that says you cannot put more into any given asset class than allows you to sleep well at night. And part of this is kind of captured here by the mouse and the cheese, which is that you have to have a sense of protection emotionally, psychologically, from the possibility, which is going to get you in the middle of the night, that your strongest belief structure might in fact be mistaken. We, of course, want to avoid taking risks like the following, right? This picture here for me sums up the idea, the conventional wisdom that you don't invest more than you can, quote, afford to lose, or you can at least psychologically reconcile yourself to in any given asset class. And that as we participate in changing or choosing which asset classes survive or thrive into the future by our very choices, we have to remember that there are all kinds of other players who are making all kinds of other choices, and that to hedge your bets really is not a stupid idea in a macro sense. So there are people who are moving into the crypto sphere because they are anxious about the state of the stock market. There are people who are in the crypto sphere who are feeling very anxious and might be well advised to take some of their profits and return them to more traditional instruments. It's really all about trying to figure out how you proportionately organize the things that you own in a way that volatility strikes you as a sign of life rather than a set of risks that you had not prepared yourself for. And so back to the idea of risk being something that people need to navigate with regards to the kinds of scenarios that they can make probabilistic bets about. We also want to talk about here quickly the idea that risk comes from not knowing what you're doing, which is another way of saying that ignorance is always something that carries higher risk. And you hear this over and over again, particularly within the crypto sphere, but in any kind of investing context, that you do it at your own risk and that you need to do as much research as possible. I think there's also another reasonable perspective on risk, which says that once you have informed yourself, you really are not going to know what the range of possibilities are until you take some risks. So uncertainty is a situation where we can't quantify the risks, partly because we may not even know the risks exist. It is the Rumsfeldian, the known unknowns and the unknown unknowns. And to think about how we, any of us who are investing our time, our money, our interest, our opinions in anything to do with cryptosphere or any of the other traditional assets, we do need to recognize that it is a kind of existential reality of human experience to be uncomfortable with the fact that there are very few certainties. In fact, I would go so far as to say there's really only one certainty. So with the one exception, the rather grim exception of death, which is something that I think Freud writes very eloquently about, the certainty of death and the singularity of that certainty really is the thing that motivates all of human culture, civilization, and meaning making. But beyond that one certainty, I am definitely with Voltaire in the context that certainly, all puns intended, uncertainty is uncomfortable. But to pretend a type of certainty that is often associated with cults as opposed to meaning systems or belief systems or religions is really an absurd position to take, because it limits your ability to differentiate between risks that you want to take, risks that you don't want to take, and to cultivate the kind of peace of mind that goes with your ability to adapt to things as they happen, as opposed to taking some sort of static emotional reassurance that you are never going to have to emotionally react or make a new set of choices into the future. So that's pretty much it from me for this video. I did want to say, in the context of uncertainty, it is important to remember that although people are understood to follow their own economic incentives, and that that's the premise of much of the game theory that informs the cryptosphere, people have been known and are known to make choices that do not follow their economic incentives for emotional or political purposes. And that is one of the unknown variables that leads to real-time volatility and real signs of active life.